Hi everyone, Michael here from Elliott Wave Ireland. Well, let's just take a look at Eurodollar. We have been counting this decline as minor wave 1 and we are anticipating a minor wave 2 correction. For now, either part of or the correction for minor wave 2 appears to be in, and price now is turning down in what we are labeling as a minor wave 3. The first line in the sand, of course, is going to be the lows of minor wave 1 around the 127 area, but the big confirmation line will be the intermediate wave B swing low for this zigzag advance that we were labeling for minor wave E. For now, the price action for this drop appears to be a third wave. It's got the violent start to it anyway, so we have put on our corrective channels now from the extreme of the E wave to what we are labeling now as minor wave 2, take a parallel off the minor wave 1. So our next line that we want to see for this to turn into a basing channel is we need price to take out the lower line. What I often do is I will take parallels and take internals where you'll see price has respected this line before. The trend lines we have are in harmony with price, in other words. So just taking a look at the lower degree count, the low of minor wave 1, we had been counting the minute A wave as in with a fifth wave expanding, rare expanding ending diagonal, B wave unfolded as a complex correction taking the shape of a flat, and the C wave then another impulsive advance that showed momentum to be waning. We take primary angle trend of the minute A wave, take it from B, and we see price was definitely falling away and had been leaning towards the downside. Just take our Fibonacci extensions for the minute A wave taken from minute B wave, and you can see the C wave just missed the 78.2%. So if you notice, our alternate count was a complex correction in itself. So the first leg was an ABC for the W, an ABC then for the X, and then another ABC for the Y. So if we just take this and we place our Fibonacci extensions on where we would have the X wave and then the B wave, you can see price tagged the 618 nicely. I like to see these Fibonacci extensions take place because it does confirm that we are on the right fib grid for price. And again, the internal Fibonacci's, I'm not just looking for the one. You'll often see people, I want to see the 61.8 and the 38.2 gain respect from price also. We'll look at more of that again. So then once we were anticipating the C wave to be in, we were looking for a 5-wave decline followed by a correction to enter the continuation of the downtrend with a higher probability. So you can see here, just taking it down to 60 minutes, we got the 1, 2, 3, 4, 5. This is the first leg of the correction, A, B, C, W, X, Y. I'm not really too concerned about corrections are going to be hard to count anyway. So once it's choppy and sloppy, I will tend to check out the swing points. You can see it was contained between corrective channels as well. And then look for the resumption of the impulsive, because that's where we want to be trading, the impulsive side of the trend. And yet again, you can see we're dropping impulsively now in 5s. This wave 3 is more than likely extending, so it'll be kind of an extending wave. Is often tricky to count, but you kind of want to be hoping that you're within the trade rather than counting to get into the trade. This was an ideal opportunity to get into this trade. We had originally come down in 5 waves, violated this corrective channel that was holding this ABC that we were looking at. Price came back into the channel and broke down rather impulsively again. This was an ideal spot where we got into the trade, and we've been in now nicely, and some profits taken as well. So for now, you can see that price is tagging to 1.618. So this is a common and probably one of the minimum requirements for a third wave that we were looking for. We be looking for a third wave. It often extends much further. So watch the 127 area. Price took off from this area very sharply, so we would expect some form of rebound when price would come down into this supply zone. I would be considering this more of a supply zone than just support. I'll go through the definitions of that with you maybe on the next update. So I think there might be a little bit further to fall on this third wave. We should have resistance with our corrective price channel now that we've got off our waves 1 and 2. For now, the best count is that the downtrend has actually resumed in euro dollar. We'll look at some of the correlated pairs with our next update. Thank you.